Hello, ladies and gentlemen. This is Greg McLeod from ForexPaydays.com, and I'm coming to you with our morning strategy meeting for the week beginning December 13th, 2015. Hope you guys doing well. Yeah, okay, it's countdown time for 12 days before Christmas. Hope you got all your shopping done and you're getting ready for this Christmas and or whatever holiday you celebrate during this time. It's always a beautiful time to get together with family and friends and to relax. The markets. You may, and even if you don't celebrate the holiday, yeah, I understand that. The holidays do impact the market, and a lot of people who trade these the $5.1 trillion forex market are observing these holidays, and so they're going to be taking time off with family and friends. So you might see a decrease in trading volume, you may see a decrease in activity, and so if you're trying to trade and you're seeing maybe certain patterns not holding up, or maybe prices aren't going as far as you thought they're going to go, it's probably because there's a lot less liquidity out there. Now, on the other hand, the flip side of that is you could have some very exaggerated moves during the holidays, and we can draw closer to these holidays, to the Christmas and New Year's. So you could see actually exaggerated moves as well. I mean, maybe because there's people just not there to take the other side of the price, so things just keep moving and moving until they hit the next significant levels. Anyway, and just be careful out there. That's my point is to be careful out there. Keep your stops tight, and your friends tighter, right? Okay. So this is what we're going to be covering. We're going to be covering the dollar index, these various instruments. We're going to cover the euro dollar, the pound, there's US dollar, known as cable, the Aussie dollar, known as the Aussie, the dollar yen, dollar CAD, the S&P 500, the FTSE 100, Brent and WTI oil, the US 10-year Treasury note. We'll take a look at our economic calendar, and then we'll also maybe take a look at some sentiment and also gold as well. So let's go ahead and get to it. But before we get started, I want to direct your attention to the risk disclosure on your screen. Make sure you understand all the risks associated with foreign exchange trading, and it's right there. And this is an educational webinar to give you the significant areas of support and resistance and possible price direction for the upcoming week. Now, a little bit about myself for those who don't know who I am. I'm Greg McLeod, and I'm the Trader Transformation Architect. And what that means is I take people who desire to be professional traders, who want to go from becoming hobby traders, giving more of their money to the market and less money in their pockets, to people who actually can take money out of the market on a regular basis. And that's what I do. And it's a transformation, it's a process. I have a patented process for doing that. I have a patented system for doing that. And if you want to find out more about that, you can always email me at greg@forexpaydays.com to find out more about that, to see if that's for you. And I'm uniquely qualified to help you transform yourself from a retail trader to from a hobby trader to a professional trader, one who gets paid. That's what we call it, paydays, because you're getting paid instead of you paying the market. I am the founder. I'm a 20-year trading veteran and trading mentor. I traded options, futures, stocks, forex, and all this. I traded currencies on the Chicago Board of Trade before there were spot forex currency brokers. So I've been trading a lot longer than some of these companies even existed. So that means I have a lot of experience that can help you out so you can become a better trader. You don't have to wait 20 years to be good at trading. You can tap into my experience, right? So I've spent 8 years working behind the scenes, not just retail trading or trading for myself, but I spent 8 years as a currency analyst and trader coach at one of the largest retail forex companies in the world. That's FXCM. And so many of you know me from FXCM, from Daily FX. In fact, many of my articles are still on the web being used. So one of the largest companies in the world are still using my material. It means my material and what I do is good. And so you can rest assured that I'm for you if you decide to choose me as your mentor or educator. I've also spent 16 years as an instructor in public education, and I've helped everyone to learn how to trade from ages from 14 to 88. I have spanned the whole spectrum. So if you need instruction, I'm the one. Now, part of my trading approach or my technique, I'm known for short-term scalping, and I worked at a top-tier bank too as well. I use CTrader, the CTrader platform. It's a professional-grade trading platform. It's ECN, DMA, direct market access. You're going directly to global banks and so that way you're getting a fair shake on price. You're not getting prices spiked against you, or the broker taking the other side of the trade, making money off your losses. So it's a fair. You have to start with a fair platform. What's the use of learning how to trade if you don't have a platform and a broker that's on your side? CTrader is a sealed platform. It can't be manipulated like other platforms can, most notably like MT4. This is the CTrader platform. Now you can get it from a lot of different brokers that have that. They have the platform. You can go to, I believe, Interactive Brokers has it. The Traders Way has it, and that's what I use. I use Traders Way, tradersway.com. You can go to this link and download a demo, and you can actually use that platform. You can go to bit.ly /time to change to ECN, and you can go ahead and open an account there. Let them know the Forex Payday sent you, and we have some educational courses and things for those people who sign up. Okay, let's get right to it and get to our fundamental news and charts and things like that. And let's go ahead and pop it up there for you. And so let's start with I like starting. I have a trader's checklist. If you have not gotten access to that, a very helpful tool to help you in your trading, and you can get that if you go to my Twitter page. You can get access to that. In fact, what we have here is our trader's checklist, and if you go to my Twitter page, if you go to Twitter, you'll be able to sign up for this free checklist that I have designed. I make it available to my traders. Okay, so just go to Greg McLeod Trader. Okay, and I'll just go ahead and just show that to you. Greg McLeod Trader, and follow me on Twitter, and go ahead and you can click that link, and then you can sign up for your trader's checklist. This trader's checklist goes through step by step the method I use to approach the market, and so you want to click that link, and it will take you to a squeeze page, or a page where you can enter your contact information. I won't spam. I promise not to spam you, and then you can go ahead and get your trader's checklist. So you'll know how to find the trades, and you go through the same process as I go through in order to find good trades. Okay, so there you go. You just go to Twitter, and then I'll take you to our page. Okay, so the first thing I like to do is I like to check news headlines, geopolitical events. Now, since there's nothing really going on right now, we would check that. Then I like checking the indices. Now, since the markets are closed, we can look at the futures market and take a quick look at that. And that'll check Forex Factory. So we're actually going to do that because right now it's Sunday and the markets are closed while I'm doing this recording. And so we're just going to focus in on those things. But again, this is a really great list that I compiled to you. All the things I tick off. It just takes me a few minutes to tick things off. A little hour of preparation, and you're ready to trade. So I check the dollar index, the basket of currencies versus the US dollar, and I like doing that. But before I even do that, I want to check the news. I want to check the economic announcements and releases that are coming up. Okay, and so that way we'll know because if you've ever been to a trade and had it move against you, and I go to a site called forexfactory.com, or you can, if you're a member of our trading club, you get access to our Forex calendar there as well. They get Techie Manufacturing Survey. What I do, I like looking for significant, big events that are pretty important, usually red folders. If I don't see a red folder, I'll probably ignore it. ECB President Draghi is going to speak. He's been speaking a lot. Usually when he speaks, you get big moves in the euro, and the euro is kind of moving flatline ahead of this move here. Okay. Ahead of his announcement at 6 a.m., we have this tight consolidation. Then we have on the 7:30 we have the monetary policy of Australia. 71.86 is currently trading, and you'll get the minutes, basically the report of what happened at those minutes concerning an interest rate announcement. So we could see a possible breakout there if those are hawkish, or they're talking about raising rates or something like that. So we want to be on the lookout there. Okay. So those are the two big ones for Monday to look out for. So imagine that the euro and the Aussie are going to be in play. We want to look at maybe euro yen, euro pound, euro the dollar, Aussie yen, Aussie dollar, euro Aussie. So these currencies will probably be in play on Monday. Tuesday we have the CPI, which is the Consumer Price Index, and even though this stands for index, think of it as a inflation gauge year on year. Inflation is expected to rise from negative 0.1 to 0.1, and that could put a lift underneath the cable. Could send the pound higher versus the U.S. dollar, and the pound higher versus a basket of currency, including the Canadian dollar and the euro. And we'll take a look at some charts as well. Then it's a big UK day Tuesday. It's the MPC member Haldane's going to speak. We have producer price index as well, expected to fall. And then you have the real estate price index expected to rise. Core CPI expected to rise as well. And so we have a number of inflation data. So Tuesday will be the day. If you want to trade a currency, the pound is probably the currency you want to trade on Tuesday. So you want to look for support and resistance levels and do your analysis. Okay, when you have big days like this with lots of news, leading up to that news, you're going to create that volatility. So a lot of people are going to be focusing your attention there. You don't want to probably be in some other currency like the Swiss franc or something, unless it's versus the pound, because the party is here. Another red folder, German ZW economic sentiment supposed to rise, so we might see a move higher in the euro. We did have the euro break that 109 area up to that 110. Then we have at the 8:30 manufacturing sales out of Canada. No forecast is given. And then we have U.S. inflation data, CPI, expected to fall from 0.2 to 0.0, but core CPI, which excludes volatile food and energy, shows that the inflation remains steady at 0.2%, far below the Fed's target of 2%. And remember, we do have an interest rate announcement from the Fed. The Fed is widely expected to hike interest rates this week, and so we could see some big volatile moves in the U.S. dollar and the majors versus the U.S. dollar. Empire State Manufacturing Index supposed to rise from negative 10.7 to negative 5.7, and that's going to be in that 8:30 news cycle. So that's going to be pretty volatile. At 8:30, the euro is the anti-dollar, so you want to check the euro during that time as well. And then we have the New Zealand GDT price index. No forecast is given, 3.6%, and and we don't get the time either when that's going to happen. So at 11:45, we do have Bank of Canada. Governor Pelosi is going to speak, and usually when a central banker speaks, it really could send a currency going crazy. So you want to watch the Canadian dollar. It may be in play. We did have some 8:30 news out of Canada as well. So the Canadian dollar may be a currency worth looking at. We do have some other data out of New Zealand, the current account deficit. It's a medium impact announcement. If you're up around that time, 4:45, usually the platforms, the price platforms are closed until 5, so you might not be able to trade this at the time this is released. And then we have mid-year economic fiscal outlook. And if there's not a number given, I kind of ignore it, because you want to see the difference between expectations and a forecast. And if there's no forecast, well, there's no expectation. So therefore, there's not going to be a difference. We can't really game it to kind of like see that volatility. French flash PMI, a lot of the PMI surveys coming out of Europe, there's very little change. That comes out at 3 o'clock. In the UK, we have average earnings index supposed to fall from 3.0 to 2.5. Could be bearish for the pound in the short term. Claimant count change is supposed to fall from 3.3 to 0.9. On the other hand, that would be a bullish sign. More people are working, but for less money, right? And then we move to 8:30 with building permits. Building permits unchanged. Remember, we're going into November, going into maybe a seasonally adjusted period where, actually we've had a warm winter here in the U.S., and that's what makes the climate change talks very important, because it's supposed to be when we're 1 degree higher than we were in the 1800s. Like, okay, big whoop on that one. I don't know if you're a climate change person. I'm not. They've been hollering climate change, global cooling, global warming. Now it's climate change because they can't get it right. Housing starts supposed to rise from 1.6 million to 1.14 million forecast. That could be bullish for the U.S. dollar. And then we have a bunch of data coming out. This is the big one, guys. This is the mother of all. This is Wednesday, December 16th. Mark your calendar, set your alarms, and you may not want to be in the market around this time because people are all anticipating this big move. I wouldn't necessarily want to game this. You might see what's going on because it could be one of those things. I mean, they've been talking about this Fed announcement for like years. Oh, we're gonna raise. When the unemployment gets below 6%, well, we've been below 6% for almost a year now, and we're finally getting our first raise. And we were supposed to have one back in September, and we didn't do that one. So it's widely about 86% of all analysts say that we're gonna get a rate rise. It's very well telegraphed, and so it could be one of those things where it's buy the rumor, sell the news. The rumor's been going on for like a year now, and the dollar has been just going up gangbusters. So once we finally get a rate hike, guess what? The dollar might go down. It's like because especially it's a one and done. They'll say, hey, we're gonna do one. The next one we're gonna do is next December. Well, guess what? No one's gonna want to hold the U.S. dollar when they get a higher yield somewhere else. They can still get 2%. This is still low. From going from 0.25 to 0.5, I can get 2 over in Australia. So I'm buying Aussie dollar. This still is a carry trade favoring any currency other than the euro and the Swiss franc. Swiss franc, they're gonna make you pay to hold their currency. So you want to find a high yielding currency, and maybe after this announcement, you might see Kiwi and Aussie rise against the dollar after this move. So you want to maybe keep an eye on that. But Kiwi actually of GDP quarter on quarter, that's the gross domestic product. No forecast given, 0.4%, and that's a big red announcement that's coming out at 4:45. Okay, so that could be pretty interesting there. Again, big day on Wednesday. And December 17th, we go to the German IFO business climate. It's supposed to rise to 109 to 190.2. And that'd be good for the euro. Remember, the eurozone is composed of several countries: Germany, France. Germany being the biggest, and then followed by France, and then followed by Italy. And then you have other countries that make up as well. So we're starting to see some better, because of all the monetary weakening. Even though the ECB is weakening, is providing monetary stimulus, much like the QE in the United States. Normally, QE will make the currency fall, but it's actually having an effect. They're starting to see some domestic consumption, and so you're seeing some higher data points. So guess what? If QE works, it would actually boost the currency because the way it's supposed to work is supposed to stimulate economic demand, making things cheaper for people to afford to consume. That was the whole point. In the U.S., we kept putting more QE, and things just got lower and lower and lower as people become more and more fearful. And the job losses caused people to tighten up their budgets. So the more QE they did, the more the economy got worse. So, but the way it's supposed to work is by putting all this cheap money out there, companies would be able to take more risk. They would invest in more infrastructure or more technology, expand, hire more people. Those people will buy things. People start feeling good, and it's supposed to change. But that did not happen. Okay, so it wasn't that QE didn't. It was like a medicine that normally works, but it only works on certain people. Well, it didn't work. It's taking a lot longer to work here. Okay. So unemployment claims, so where we got retail sales out of the UK. It's expected to rise sharp from negative 0.6 to 0.6. We could really see cable take off next week. Notice that we're getting these positive data points after, they're kind of like lining themselves up, right? Fed manufacturing index is supposed to rise from 1.9 to 2.1. Unemployment claims are supposed to fall from 282 to 271. These are 2 bullish points for the U.S. dollar. However, the dollar could just move sideways. It can move sideways, and the other currencies could still move. So we'll take a look at the U.S. dollar. So we could have some positive data that may offer some pullback opportunities in the other currency pairs. Again, I think that it'll be will probably rally into the announcement, and then once the announcement is done, and they actually hike interest rates, then I believe that the dollar will continue its decline for the rest of 2017. That's just my opinion. And you can check and say, hey, Greg, you said that and you were wrong, dude. And you can play it back at me and send me all kinds of emails, Or you can say, but hey, if I'm right, though, send me the email and say, dude, you just got it spot on, dude. You just rocking. And guess what? I like that, all right? Don't tell me something. Don't just complain to me when I'm wrong. Tell me what I'm doing right. You'll be better. You'll be a better person for it, right? We have ANZ business confidence coming out 14.6. Again, they're really not big on putting out forecasts in Asia. New Zealand, Japan, Australia, you're not going to find the forecasts. The forecasting is a big European and American thing, which is a pretty interesting. If you notice, you won't find a non-forecasted number in for the U.S. or Canada or Europe, but you'll find Asia will leave the times off. It's tentative. They'll leave the dates off. It's really like a low pressure zone, I guess, over there. Even China, like, oh yeah, it's tentative. Well, we might release the number between midnight and 4 year time, whenever we feel like it, right? But America 8:30, we got this news cycle, 8:30 news cycle. UK has a 4 a.m. news cycle. Anyway, we have BOJ press conference, and that's going to be see tentative and no forecast, nothing. They keep you guessing, which is it's like the way it's about the way the Fed used to be back in 1994. The Fed never gave you a time, and they never told you when they were going to hike, and they didn't even announce it. You just had to find out when the market is going crazy. It's moving. But Greenspan recently, as of 1994, actually announced whether the U.S. hiked interest rates. So all this that you're experiencing now is really, it's like within the last 20 years. 20 years before that, it's like you just had to guess. So they're a lot more transparent, and they communicate a lot more than they had been. Okay, let's get to the technicals. You're probably like snoozing. Okay, dude, Greg, let's get to the technicals. And I know that because most people are technically oriented. So am I, but it's very important to know the fundamental backdrop. Now, here we go. This is good stuff. You can wake up now. U.S. dollar index, baby. We got this. We said higher highs and higher lows. This has been a fantastic uptrend, and you can see how massive it is. If you go back, and we were basing around 78, and everybody thought, oh, America's going to default, and the dollar's going to die. And at its worst point, boom. It's like we just took off 78 to that 100. And I said we're going to retest that. I know somebody asked me, I think it was, somebody had asked me earlier about the old high, about is the dollar going down? I said, nope, we'll probably go back and test this old high back here from March 13th, 2015. We would probably go and test that out. So that's what I said. I said, hey, you know what? We got this old high back here, and that's probably where we're going to go. And guess what? It made it back there. So we got our double top right there. Got north of about 100. It's just shy of 100 spot, 100 and a half. And now, bam, big old long bearish engulfing, just an insane candle to the south side, down to that 9766 area. This is the big giant move we saw in the euro. You flip it around, when that was an ECB, when Draghi came out and started talking, and that's when the euro just totally did a blast off move. Well, you got to be a big move or broke a significant trend line, bouncing off the 9766 area, rallying up to right here about the 9888. We could probably put a new line. Now these are lines I put in before. Okay, remember these lines I put in? I've been following these lines for a few months now. And so we broke. I said we're going to get down there, that 9766, and we did, which is the old high back here from May. It's acting as support, but we probably got a kind of this correction down. We might see a rally off this 9757, Maybe a move back to 98.44 for FOMC. Maybe by Wednesday, we might see a rebound. Okay, so we did hit support, and usually when we hit a level of support, it doesn't have enough momentum just to like slice right through it, unless it did this one, which it just sliced through level after level after level after level after level. I mean, just like a hot knife through butter, right? But we hit this level, and now probably some little profit-taking decline, a rebound here. We could rebound up to that 98.44 area, and then from which would mean a drop. We probably see the euro drop, and then we'll see then probably after FOMC, after the interest rate, we'll see this drop and a tag of 96.56. Okay, 96.56. Now you probably say, well, Greg, that's amazing how you could figure this stuff out. It's like, yeah, do you know my students can figure this out too after being with me? Which is really cool, because sometimes I just let them do it and I just sit back and watch, which is really cool. But anyway, let's keep going. Let's go to the euro. I spent a lot of time on the U.S. dollar because it's very important to understand it, because we have FOMC Wednesday, December 16th. All right, and here's the euro, and here's that big giant move that we saw. The down move we saw in the U.S. dollar is the up move in the euro, because the euro is considered the anti-dollar. All right, it's the anti-dollar. When the dollar goes up, the euro goes down. When the euro goes down, the dollar goes up. And so this was our move down here. And I said, hey, we're going to probably get a move to the upside. We came back and tested this old level of resistance, the old kind of like a wave 4 high. And now we could probably see a decline from this area, this one spot 1017. And maybe we come back down to retest the 107.94 area. Okay, so I love to get maybe get short just below this these tweezer bottoms right there. 109.23 would be the break. We could get 1, 2, 3. I mean, if we get a retest of one spot 101.15, I'd love to maybe short it higher. Okay, short high, and for a move back down to 107, or a break below 92.75. Okay, but so that is what I'm kind of looking for. I think FOMC will take us down here initially, and then from there, FOMC takes us down to 107.92. From there, I think we go back up to 113.83. Okay. So either you're shorting on the break below 109, or you're shorting at 110.17, or you're just saying, I forget all this, I'm going to wait till FOMC is finished and come back and get long at 107.92 for a shot back at 113.83. Greg, I had actually someone when I used to work at the brokerage, that's irresponsible putting those kind of arrows there. It's like, well, I'm right, so I don't know, whatever. Haters will always hate. Okay, GBP USD. Let's go ahead. I keep it going, and I got a lot of stuff here. This was the short that I was telling you about for a long time. I said, look, this is going to do a break and go to a new low, and we did. I was looking for a target, breaking the trend line, and we did hit the demand zone. And I was looking for a rebound there, and man, that zone was like crazy, up, down, up, down. But look what we got here. Looky. This thing is popping higher, and I think we might, maybe make it back up here to this 153.50. Okay. And let me just go remove all this stuff. But that was a move. I had even tweeted you guys, and also Facebooked you guys. If you follow me on Facebook, come to my Facebook fan page, and then if you come there, Forex Paydays, and you check you can check out my Facebook page, and I post things there, and you can. I talked about, I popped the euro trade in there. I said we could. I said euro one spot 0.817 sitting like a bird on the high wire at the 200 SMA. Back dojis to EU could get back to 1 spot 100 high, and it did. Okay, so I posted that on December 7th. So make sure you check, because I'm putting stuff out there for you guys to help you guys out in your trading. And so that's my whole goal. And my mentorship program is not cheap. You know, and I think I wouldn't trust anything that was cheap anyway, and you shouldn't. You know, you wouldn't buy discount toothpaste for your teeth. Teeth are very important, so you wouldn't want discount information for your trading. And so my whole goal is to give you high quality, you know, work, give you high quality things that can help you in your trading. And those things that I give are not cheap because they make so much money for everyone. Okay, that's the key. Now I spotted this on gold, right? And I posted that, and see and I said we get in our low 106.21, and this is the arrow I drew, and this is what I told you guys about. Okay, back on that was December 6th, and today is December 13th. And I said we can get down to 1073.31, and we actually got down down to 1062. And so that's, again, if you don't visit the Facebook page, you are missing out on pips and you're missing out on money. So make sure that you come and you visit. Okay, visit often, and like the page too. It inspires me, makes me want to post more trading ideas, which means possibly more cash in your pocket. But if I don't see any likes, I'm like, oh, okay, people really don't care. So, you know, remember, I make money anyway, so you got to fire me up, inspire me with retweets, some shares, shows that I'm really making a difference, or I'm just wasting my time because I can spend more time in my own trading. So, again, looking for cable to get back up to the 153.50 area, especially when we have this data coming out. We might, you know, this may continue and keep going. I believe that we go. Since we did make a new low, 345. We did make a new low, and we broke the demand zone. But now we're above this demand zone. Came out strong out of it. Okay, and remember, you can get my supply and demand zone course too. It's there. If you get the checklist, you can get it. If you apply for the checklist, there's a spot. But I've really taken that off of the website. Again, I'm selling it too cheap, $47, way too cheap for that. I'm just too lazy to change the price, and I don't really have it on the website. So if you apply for the checklist, there is a box that says, you know, 80-year-old strategy that still makes money. If you click that button, they'll take you to the page, and you can research it and look at it, and that's a supply and demand course. Okay, but I don't advertise any. I don't need to. But you know, if you want to find out more about this, I get emails. People are like, hey, how you do the green boxes? Well, here, and I'm sending this as a recording, so I don't have a chat box to drop it in there for you. But so just get the checklist, and you'll see a strategy. Click that button at the bottom that says, hey, you know, when you go to the thank you page, and that'll take you to the purchase area where you can purchase it for $47. Okay. So if you're here with me and you're listening and you can hear it in the sound of my voice, congratulations, you're going to get a discount. If not, you're just not going to hear it, right? Anyway, that's pound. Okay, so we took a look at the AUD USD. I always want to take the ones with the currency in the front first, and that way we can keep them the same. Now, I said if we could break that doji high, we could hit this old resistance area, which we did. We did break it. Okay. It dropped that morning evening star here, came down, did not quite touch that line. Then prices rallied, broke out again, did touch the old high, got a double top right there at the 73.87, double top 73.70. I'm sorry, and then price came back down, really whipsaw action, no trend we're still in this indecision triangle, and now we're back in the triangle. And so we might come back and, you know, we've got lots of buyers stepping up in here. So we might not get to this 71.56 area. We may make one more U-turn back to the upside. We'll see. Let's see if we might turn around here and head back up one more time. Okay. Just lots of indecision moves here. Eventually we'll probably come back and test the support. But it's really choppy. I'll be hands off here. We're still stuck on the chop. Unless we can clear 74.53, if we can clear that, probably after FOMC, we could see 77.33. Okay, but we're in the middle of chop city. So I would look for a clear above 74.50, 74.54 to get involved in this, because it's just way too indecisive here. Let's keep it going here, and let's go right to maybe NZD USD. We do have some New Zealand data coming out, and sometimes I don't cover the New Zealand dollar because it kind of like moves the same as the Aussie, and I always want to save time here. And here again, we're in a congestion zone, and but we did bounce off some daily support coming in at the 65.94 area. And we need to break 67.87 for a move back to 68.96. Really haven't done a whole lot of anything. Those we get below. There is there's this long wick here at the 65.68, but there's all kinds of congestion there. And so we need to clear 68.96. 68.96 is a magic number because there's lots of open space, and we can get a move back up to 72.27, and that's where I'm looking for. I'm actually looking for a move toward a more bullish, constructively bullish. We have higher highs, failure swing higher, so we could see that. Okay, let's go USD. Let's go to Canadian dollar this time. And this was I told you guys on this one. Okay, I had the triangle. I said we get a breakout above that 34.51 area. Look out, Jim. And look, right to the line. I drew that line, not last week because I didn't do Good Morning Forex Asia, but I did draw that 2 weeks ago. Took a while, and even my wife traded this. She got like 100 pips on this. She was so it was just that easy. We got that nice ascending triangle breakout, bullish breakout, and all clear all the way up to 37.94. And I drew that arrow week before last, and there we go. We're right on target. Okay, so if you're in the members area and you're able to watch Good Morning Forex Asia, congratulations, you made some big time pips there. We got a guy in our room named Lou. You've probably seen him posting, and he's been killing this dollar CAD. Just a regular money bank for him. Here's dollar yen. And now here we got our breakout too. Did not do similar. It didn't follow the same path as dollar CAD. So you go, hey Greg, you got that one wrong. We did make it back to the old high. Okay. And yeah, we're looking for a break higher, and then it actually broke lower. You know why? We got the global stock market's been selling off. The oil's been low, and so the yen. When we have a yen pair, the yen gets strong when there is lots of stock market losses. So this was moving in tandem with the stock market. We did break the lower boundary, and we did tag this old support area, then busted right through it, and maybe we're heading back down to that 120.06 area. Okay, but I think we're going to get a little bit of a bounce here for FOMC. Usually the dollar yen will go up if there is a bullishness. I know if there is a central bank hike in the U.S. I know a lot of people are like going, well, many of you I've been in trading. You probably start, if you did not trade before 2008, you probably don't even know what the market looks like after a rate hike, which is really going to mess a lot of people up because they won't know. They'll think, oh wow, it's a hike, I'm supposed to do this, and you've never seen it before because you just started trading, and the Fed has been easy money's been for the past 7 years. So many of you have not even been trading that long. So it'll be very interesting to see what kind of curveball might be thrown on Wednesday. And I would just say, stay. If you don't know, you're not sure, if it doesn't look easy, stay away because it could really hurt you. Okay, let's keep going. Let's go to gold, XAU USD. I kind of gave you a glimpse of that. I gave you a spoiler alert that we could probably see gold go up. Downtrend, lower swing highs, lower swing lows. Failure swing, we tag that low, and now I look for a big time move to the upside. Why? Because the dollar commodities are priced in dollars, and so when we have commodities priced in dollars, when the dollar goes down in value, it makes these commodities go up in value. Okay, so we might see a little bit of a surprise. Maybe gold going back to about 1108. Okay, and you probably, how do you do that? I could show you, But if you join my mentorship class, you get the keys to the kingdom. I don't hold anything back. If you had mentorship, I had a guy just do 32% in his account, and so I'm very proud of him. So so if you want to join and become part, and you want to, in fact, I've got his testimony right here. I hope he doesn't mind me sharing with you his testimony. Okay, and he says, "Thanks, Greg. I feel I have turned the corner of my trading, and it's a lot more consistent now. I made another 12% in my scalping account yesterday for a total of 32% for the week." Okay, this guy is in Australia, and again, when I have those kinds of results for my students, I'm in high demand. So I really have to limit the size and the amount of people that I have in mentorship, because I teach the classes one-on-one. I don't want you bugging this guy, so I'll hide his name. I keep the classes small so I can train you. But on the other hand, the business has to pay for itself. This is not a charity. I don't do it for fun. I do it for fun. I really do enjoy getting stories like this. I just make a lot of success stories. I have people that just make money. I have a lady that makes 200% per year, and her husband's like going, "Hey, you want to go out with him?" He's like, "No, just kidding." Anyway, no, they're happy. They have extra money in their account. They wake up in the morning, they turn their computer on, they follow what I do, but they don't even have to follow what I do because I'm not even in the chat room that often anymore. Just to get feedback when someone asks me a question. For the most part, people trade like me. They know my secrets, and so they trade and they make money. I've given them the secrets, and most of these guys are not going to give you their secrets because they're afraid that you're going to sell them or whatever. Not. My thing is, you're making money with your own trading. You don't care about having courses or stuff like that. You have sought so long to try to find out how to trade successfully that once you've got the magic key to unlock the door to hundreds of thousands of dollars, you don't really care about teaching anybody. You just want to trade, make money, and have a good life. And so I share everything with you because I want to see you successful. I know that jobs are very high pressure around the world. They're making you work harder for less. Real salaries in the United States have not risen since 1995. So on an adjusted inflation basis, and many people cannot even get jobs even with degrees because these new technologies and everything's changing so fast that even with a degree, they are not qualified. And they spent 4 years in hundreds of thousands of dollars and student loans and debt, and they can't pay it back because they can't even find a job to. And I don't mean to get depressing, but I figured, you know what? Let me teach you how to trade, because guess what? My system has not changed. Maybe it's improved a little bit, but it really hasn't changed in 15 years. Wouldn't it be cool to be trained in something once that has not really changed and then be able to change your life? Okay? Not, oh, you need to be retrained because you're out of date because, hey, you know what? We don't make 8-track players anymore. We're using CDs now, or we're using MP3s. They keep changing the technology. You'll never keep ahead. You'll constantly be trading your time for dollars, and you'll constantly have to be retrained all the time, and always subject to having technology downsize your job, or a merger acquisition. Two companies merge together, and now you're a RIP or RIF, redundance in force, and they just liquidate you. Oh, sorry, George, we don't need you anymore because, hey, we just merged with XYZ big box company, and they have someone in the accounting department that does the same job you do, and they're younger and they're cheaper, okay? And you're 40 and you're old, and we're getting rid of you. So if you're really tired of that, you got to understand this is not just about, oh, I'm learning how to trade because I want to make some extra money. This is kind of like your survival, because once you get across that 37, 38 area, in football you're kind of washed up, but guess what? In the corporate world you're probably washed up too. Okay, that's just the fact that unemployment is higher among people over 40. Why? Because you got to learn all this stuff. Usually by 40 you're just kind of on cruise control. You're doing your job, but now they can hire 4 or 5 people younger than you to replace you, and the technology has changed, so your information that you know is out of date. So you need to do something fast, okay? And that's why I've kind of been on this mission to be able to do that. But again, if you're going to go to some college or something to get retrained in something that's going to be out of date again, and you're going to spend $40,000, you probably need to spend about a third of that, right, or a tenth of that, and uh, and actually join my mentorship program so you can have a skill that you can use on a regular basis to make money in the market. So you can check out of this insanity that's going on in the job market, where you're either too old or you don't have the skills. You got to learn something. Look, they're Windows 10. It was Windows 8, and you're constantly learning new stuff, new technologies. It's like, you know, I love technology. I'm a technology. I know I'm going on 50, and I love technology. But you know what? I'm going to check out of this stuff very soon because it's just changing so fast. And I mean, even though this trading system hasn't changed, the systems which I use to trade have to be changed. You know, they're going to change the platform. They're going to constantly upgrade, and I hate upgrades. So if I make enough money, I made enough money. It's probably time to leave. So the time with me is going to be very limited too, because I'm not going to be teaching people forever, or maybe probably the next 3 or 4 years, and that's how it's going to be. So you might as well take advantage of my skills and my time while I am available, because there's going to be a time where I will not be available. I'm going to be retiring to my beach house in Hermosa Beach, and I will be unplugged and off the grid. Okay, and I'll be just a legend. You'll say, wasn't this guy Greg McLeod? Say, yeah, he doesn't do stuff anymore. You know, he plays with his grandkids. That's all he's going to do, right? So take advantage of me while I'm around, okay? Don't look up and say, oh, I'm going to take that class of Greg. No, you're not, because it's not around anymore. All right, that was a little commercial break, but you know, you get this for free, so you can endure my rant for a bit. Especially, you know, you got gold going up to about 11.08 possibly. Okay, let's go on to the next. Let's go to oil. I want to go to the oils. I'm not going to go to silver because silver is about the same thing. It's going to be a little bit cheaper for you to get in if you're buying it on the physical side. But let's go look at oil. I'm going to use the CFD because I get the continuous contract and it's easier to understand. And here's oil. And this is WTI, West Texas Intermediate, and we can see price came back down to the 36 area right here. And this was the demand zone. We actually got a little bit of a hiccup. Price hiccup there. Falling wedge did not take off. Okay, and in fact broke lower, 35.25. This was a demand zone from back here on August 24th. So this is very significant. It broke, it rallied back up. See that wick in there? If you go to a 4-hour chart, you can see how price attempted. The buyers tried to step in on the zone, tried to step in, and it got back up to about 38.89. And then this overcome this bearish sentiment just overshot it and just continued to push lower. Okay, so we are still going lower. We're at the 618 Fibonacci expansion. The next expansion target is at the 100% expansion is 2543, ladies and gentlemen, 2543. We have to go back to a weekly chart. Very important in oil. That's that old low. 33.30 is a low from February 2nd, 2009. And after that, ladies and gentlemen, there's like a big gap down here to the 26, 27 area. Okay, so this is still bear territory. They keep pumping out. OPEC had a meeting. They're pumping out more oil. Saudi's not stopping. Iran's going to come online. Iran's not even online yet. Iran gets online. They start pumping about 400 million barrels or something like that. This baby's going to go right through the bottom of your screen. If your screen says Dell, price can go below Dell. Okay, just because it's the bottom of your screen does not mean that price has to stop. It could go a lot lower because they're still pumping. It's all about supply and demand. UK oil, let's take a look. And look at that. That baby just broke. Here's our demand zone. Try to come up out of the demand zone. It hit it. Hit the zone. It touched the top. Try to rally out of the zone. And remember, I drew that weeks ago. I drew this zone before price got here. And look at us down here, 37.66. And we could continue to move even lower, ladies and gentlemen. It's the pain and this is in fact where the U.S. is sending more combat troops to Syria. Geopolitical risk. I mean, they can start blowing up refineries over there, but there's so much oil being pumped, and no one's following the OPEC. It probably as a cartel doesn't really exist anymore because they're not working together to hold price up. they're just pumping and cheating and breaking all their quotas. So we can see a move down to 36.05. That's about a good 40, $1.60 lower than where we are now, which is huge. Okay, let's go look at the indices now. UK 100 is FTSE 100, FTSE 100, and and we can see that. See the transports, a lot like the railways. And say, why is it? Oil is cheap, and that's good. That's like a tax break for citizens because the petrol is cheaper at the pump. Yeah, but the companies that transport oil, like the railways and the shipping, well, they're not getting as much money because there's not a big demand for this stuff. We're awash with this stuff, and so the transports are down. Any of your airlines are down. Everything is down because these companies would earn money from transporting this energy, and the energy is cheap, so everything is just falling. It's a quandary because you would think cheaper input costs mean that we should have more money to spend on other things. But you remember these workers are maybe laid off. The oil service workers and things, if they're cutting these positions, these are people that would buy things, and so the economies never get a really good recovery with this kind of deflationary pressure in oil. So we can see the index. We can get a test 57.61. I was looking for a bounce from this wedge, but this is actually like a bear flag, and so we may see another, actually now, a push down. And I was wrong about this. I was looking for a rebound here. We did not get a rebound. In fact, we just pushed right on through, and we could keep on going to that 57. So I'm probably going to take away my bullish view, and we could go lower. We can test that low, 57.61, and we have another classic low. I didn't even think I was ever going to even go down these levels anymore. I took those levels off. I thought, usually since 1950s, this Christmas, December has been a bullish rally for the stock markets around the world. Traditionally, it's a very bullish time, seasonality. And look back at December 2012. Look how much the FTSE 100 moved back in December 2012. 2014, go to December, we moved up there as well. It was we moved here. That was December 16th, and we moved up. So we've had these up moves. This is like the first time we've ever seen like kind of a really down move in December. So definitely unseasonal, but and we can see maybe we even get down to this 56.12. But it's maybe a five-way move down. 1, 2, 3, 4, 5, and we blow out capitulation 56.10. Maybe even extend it to 54. If we get anywhere around these two areas, 56.12 to 54.22, from there I believe we wash out all the weak holders, and they finally give up. And then what will happen is we could see a big rebound back to the old high. Okay, so we might have more to go to wash out, take out these players who are long, wash them all out, and then maybe we get to one of these areas we can get out higher. Let's go to SPX 500 and take a quick look. See there, and there's a weekly. And I was looking for, again, looking for a bullish move. I was looking for a retest of this line, so I was bearish. This is the demand zone. Actually, price rallied up to this supply, this heavy supply zone area. This red zone was thick. I mean, we could not break this zone. This zone goes way back. Finally dropped, and I think we come back to test that 1952 trend line. I was looking for that line to get tested earlier, but I actually think we probably test it on this go around. We'll probably break this 2010 area, break the 1987 area, and come back to this support. And then maybe 1969 to 1980. Trend line connection 1958. I believe we hold that 1958 area. If this trend line goes though, then oh wow, we could probably get a cascade move down to the 1800. A triple bottom would be extremely bullish, and I would look at extreme long, going for long positions in the 1868 area. A retest of this, a third test of this point. But I'm looking for this trend line to hold. Is not it. It's 2 points to form a line. The third point on the line is the first test of the line created by 2 swing points. So we've got 2 swing points here. 1, 2, but it's untested. This will be the first, this move coming back down will be the first test of that line. So a lot of buyers will probably step in here. You might get a little bit of a bounce here, but if we don't go, and if we don't get up and above this congestion, we could break that line and come back down and make even a lower low, right? Okay. So let me go to the TNX. That's the TNX or TNY. How about that's the I'm looking for dollar. Is it dollar TNX? I'm looking for the 10-year Treasury note. Let's go 10-year. Okay. They change signals. Let's go to index. No. Economy. Okay, that is. Okay. We had a TNX. Okay. There we go. Treasury note. CBOE. Okay. We can see that even though interest rates are set to go higher, we actually see interest rates falling, or the yield on the 10-year Treasury note falling. Okay. And that kind of tells us that that people are trying to lock in, they're fearful, so they're locking in their yield, and if they're buying these Treasury notes, it's going to force yield down. So double top on yield, we actually can have, even though they hike interest rates, we could actually have yields fall back down maybe to the 1.90 area. And I think once those yields get down there, that's just going to be a boost for the stock markets. Okay. Because usually the Treasury, the bond market leads they lead the indexes, they lead the forex. In fact, I lived in front of a bond trader. Bond trader had a room behind me. I had a house, lived in the house in my neighborhood behind me. In fact, both our daughters go to the same college. I saw her and like going, isn't it funny that bond traders seem to lead the market? And the bond trader's daughter is at this college, and my daughter's in too. It's like, it's very ironic. But I guess the universe telling me, always watch the bond market, because the bond market leads all markets. And so the bond market's telling us that yields are going to fall, and usually when we have a falling yields, stock market goes up. That's economics 101. My mom took me to economics class. Yeah, it's like, well, that's how you get so smart. Yeah, I was 13. My mom would take me to college with her at night, as like a bodyguard or something, or I know wound up helping her with her homework or something like that. But she majored in business and economics, and so I remember the big arrows on the chalkboard in the university. When rates go up, stock market goes down, and when the stock market goes down, when rates goes down, the stock market goes up. So there's an inverse relationship, right? So that's always been drilled in my head. So when you see something like this, it's actually pretty bullish for the stock market. Now, if you enjoy this, let me know. Email me at greg@forexpays.com. Visit my YouTube page, and we're gonna finish up here. You come to my YouTube channel, Greg McLeod. Visit my channel, and I'll pop different videos in here for you. And also sign up. Come to our website. Go to forexpaydays.com, our website, and actually sign up for membership. You can be a free member. There's some resources available to you, and our webinar schedule that you'll get access to as well. Okay, you can have me if you want me to be your mentor. You can click here. I also have a free webinar there you can watch, and if you want to schedule an appointment with me, you can do so as well. And so you can come out there to forexpaydays.com. If you want to become a member of our free site, there, members free, you can click here, come to Forex, go to log in, register, and you can sign up, and we can get you started. All right. I look forward to helping you in your trading. Good luck and happy pipping to you. And if I don't talk to you after the New Year's, then Merry Christmas to you. Happy New Year, Happy Hanukkah. Cheers. Bye-bye. Thanks so much. Happy pipping. This is Greg McLeod for Forex Paydays signing out. Peace and pips.